Yes, hello, good morning, everyone, and welcome to our tax savings live chat. Today is March 26th. I'm Chris. I'm the Chief Marketing Officer of my company, Waiko Tax. I'm also an IRS certified acceptance agent. Today, we would like to talk about the different options for people that are already running their business and a lot of money. But I won't be able to do it without my co host for today. She is a certified financial fiduciary, master's in business administration in University of California, Los Angeles. Also a certified financial educator instructor, a certified professional tax preparer. She also is a member or in the court of the table, million dollar round table, and then principal with Rich Consulting Services. Let's all welcome no other than my mentor and my friend, Kay Carrion. Hi, Miss Kay. How are you doing?
Hello, everyone. Happy Tuesday. Thanks for having me again. I hope you don't get tired of me being here, Chris.
No, I won't get tired of you. As long as there's taxation, I would need to have you. Any plans for this? I know we're gonna celebrate Easter Sunday. Do you have any plans?
Well, this week has been really crazy, but of course, Sunday would be a family day for us,
Hmm.
and we'll just stay local here in California, in San Diego.
Yeah, and I will be just also here in Dallas, Texas. So for those of you who are watching, feel free to follow us on our YouTube channel, Chris Waikoko. We also have on Facebook page and for the replay of this presentation. So let's get started. I'm gonna share my screen and making sure, okay, there you go. All right, so we're gonna talk about the different tax sheltered account, and that's why we're going to share the screen and let's get started. Okay, so our topic for today is tax efficient investment planning. Hold on, it doesn't play. Okay, there. So introduction to tax advantage accounts and their benefits. For you can connect with us again through my LinkedIn. I have Chris Y Coco, and also on my YouTube channel on Instagram. Just type and follow me for more information. So just FYI, this live chat is only less than 30 minutes. We encourage our participants to type their question here or even on our Facebook. We're going to check any questions on the comment sections. And if you want to have a checklist of your tax and bookkeeping needs for 2023, feel free to go to our website at wycotax.com. And we also do raffle if you subscribe on our YouTube channel, Chris Wycoco. The following presentation are meant for if you are small business owners, you're self-employed, work from home, you receive 1099s, have S corporations, LLCs, partnerships with or without employees, e-commerce, non-accountants, high-income professionals, more than $90,000. This presentation is meant for you. And just a disclaimer that this material has been prepared for informational purposes only. It is not intended to provide and should not be relied on tax, legal, or accounting advice. Example and other materials on this webinar or live chat are only for illustrative purpose and should not be relied upon technical answers. Waiko Tax is a virtual outsourced tax and bookkeeping company, and we are not associated in any institution of this presentation and is a private business providing resources for small businesses. All right, let's jump into it. For our Tax Savings Tuesday with the Tax Efficient Investment Planning Introduction to Tax Advantage Accounts and their benefits. So, talking about benefits, because our company has been serving, preparing, and planning on taxes. Normally, Kay, some of our clients are they become full time employee, then they started their own clinic. Let's say a doctor, then what's gonna happen? Let's say he's the only person in the job. He made half million, and then out of that half million, he still has a taxable income like 100,000, right? 100,000 taxable income at the end of the year. Because here on our table there are tax deferred option, right? So what can they do to those 100,000 remaining taxable income?
There is an opportunity, Chris, if they haven't set up any of their retirement,
Mm-hmm.
plans, such as if they don't have any 401k for their company, because even though you're a solo owner, If you're a
Mm-hmm.
doctor, you could create your own retirement 401k.
Mm-hmm.
Or they could also use a SEP IRA they could set up, right? Through those two vehicles, what they can do is they could define it as a IRA account or a Roth IRA account that will be a qualified plan while they're
Mm-hmm.
contributing to that particular plan that would achieve their financial goal. So on the 401k plan, they could
Mm-hmm.
create a traditional IRA account. They could create a 412E account for them that they will have a
Wow.
defined benefit inside the plan,
Mm-hmm.
that will calculate and able to them to have a significant amount of money, once they're ready to retire at the age of 65.
Mm-hmm.
Okay. They could also create a Roth IRA account inside their own 401k.
401k. Okay.
So it depends on how they want. It's all people would ask you, I'm sure, what is the implication of taxes, right?
Yes.
Well, as you know, it will minimize it, reduce it now when they're still working, but once they take it out, right, on the proper age, which is roughly about 59 and a half or 60 years old,
Mm-hmm.
they're still going to be taxable. Okay, those money that they put
Yeah.
into the retirement is still taxable. So
Exactly.
what I'm saying is there are other opportunities that they could actually talk to us and to you, especially you have other plans that you could offer or an option for a diversification, right?
Mm-hmm.
So
Diversification. Mm-hmm. Is the
exactly.
product.
So when I say about for the SEP IRA, when they
Mm-hmm.
plan to put it in the bank, the maximum that they're able to put in there is 61,000. But
Mm-hmm.
then again, it's also computed based on their self-employment income,
Mm-hmm.
that they could put in 25% of their income. But if they have a net earnings of the business, they could also compute it based on the 20%. But
Mm-hmm.
the max limit is $61,000 a year.
Okay,
Okay.
so that's a good point. So let's just do the recap for everyone. Look, so that's why you're in the right channel right now. All right. So what Kay was saying, even if you have your own practice, you're a doctor, you're a dentist, and you're by yourself in the company, it doesn't limit you from opening a 401k. And under a 401k, it's like the mother of all this product. You can open baby like traditional IRA, defined benefit. You can open that. That's the second, and then also Roth 401k, right? K
And I
401k
wanted to
is
add
good.
that too is you could
Yeah.
also put a safe harbor match or a safe
Mm-hmm.
harbor, meaning
Mm-hmm.
that this is now that you're having an employee, right?
Okay.
When you have an employee and you're creating a 401k, you could put in a safe harbor plan match,
Mm-hmm.
meaning that you're willing to match the 6% contribution of your employee up to 4.5%. So
Mm-hmm.
meaning that on the first 3% of your employee contribution out of the six, you're giving them dollar to dollar for the first three, and the fourth, the fifth, and the sixth are 50%. So in
Mm-hmm.
reality, out of that 6% as an employer, you could match it 4.5%. Okay.
Okay. Yeah.
There is another safe harbor match,
Mm-hmm.
not really a match, but it's a safe harbor also that would allow you to let the employee contribute 3%, right?
Mm-hmm. Mm-hmm.
Then even though they don't contribute or they contribute, you're going to give them 3%, all of your
Yes.
employees, right?
That.
But that is something that you as an employer has to determine what is your financial goal. Why are you
Yeah.
doing this?
Yes, whether they want to have an enough income when they retire, or they want to offer benefits so they keep the employee to retain their employee. So there are so many reasons why do you have to get this. But most importantly, this is also minimizes your taxable income every year because you're parking
Yes.
your money with this 401k. At the end, you want to be the one benefiting most of the income you're making every year, right? Now, moving forward, so I know, guys, this 401k it's complex. We're just trying to simplify everything. We have somebody that can help you, right? Okay, that they will be the one setting this up for you. So they are aware that they're not be the one doing it yourself, kind of
Oh, no,
thing.
no, no, absolutely
Yeah.
no. And
Mm-hmm.
they're going to work hand in hand with you, Chris, as well, because since you're going to be overseeing, you know, the tax implication of it, right?
Mm-hmm.
So we
That
will definitely guide you and your client, and we work together as a team, right? Because the
correct.
goal, the ultimate goal, is for the client's financial go, right?
Wellness.
It's not
Yeah.
about me, it's not about you, it's about the client
Mm-hmm.
financial goal at the end of the year.
Yeah, and then another question that I have to ask. It doesn't, what's going to happen? Let's say, again, John Smith, he has a current 401k in his previous ABC hospital. Can he roll over his 401k to his John Smith clinic? Is that
Oh,
possible?
yes.
Mm-hmm.
If he created a 401k for himself,
Mm-hmm.
whatever previous employer that you have that has a 401k, you could roll it over to your current plan. That would be no
Okay.
issue.
All right. Now, talking about the tax deferred, can they also have an annuity while having a 401k? How does it interact?
Okay, they're kind of. I just want to be clear on that question, right?
Mm-hmm.
A person, if you're maxing, because the government puts limits there on how much we want to contribute to our retirement, even
Mm-hmm.
though it's a tax deferred or a tax free retirement. So the question now is owning an annuity. Yes, you can own an annuity, because you do have the option from your previous employer. You could roll over the 401k from your previous employer to annuity.
Mm-hmm.
So if you're creating an annuity and you're contributing on it, um, and then you're not maximizing your 401k, then we have to look at the income, right?
Mm, okay.
Because again, the government looked at the limitation on that. So if you are, okay, like for example, a Roth IRA filing, right?
Mm-hmm.
You're only allowed to contribute, right? If your income as a single filer, if your income is below 144. And if
144. Mm-hmm.
the if you're
44,000.
married and joint filing, right, the limitations you cannot contribute um, if your income is 214.
It's just
Okay,
based on the gross income, right?
based on the AGI. Yep.
Yeah,
Mm-hmm.
adjusted gross income. Okay, there you
Correct.
go. So those are just some limitations. That's why it's very important to set a consultation so we could see a different in plans that you already have because they have some implications and interactions to one another from the
Yes.
income, even the age, right? Okay, age also has a factor on contribution.
Well, the age, if you're around 70 years old, right,
Mhm.
you're closing to the RMD. If you're just earlier, like, early 60s, you could still contribute because you're still working. And
Yes.
if you don't have enough, if you feel like your client has not enough retirement, and they need tax deduction right now, they can still participate,
Yeah.
right, while you're still working and while you're still earning income.
And RMD means required minimum distribution.
Yes. Mhm.
Okay, there you go. Now, so we talk about 401k and annuities that are tax deferred. What we're saying here, when you withdraw the money, you will pay tax. That's it, right? Now, as Dr. John Smith grows, he has more employees. Now, is there an option for him in terms of to open, let's say, tax free, having his own bank? Let's say, how does a life we call it cash accumulation
Mhm.
option can he has that in a tax-free category. So we're talking about this one. Let's say he maxed out
Well,
everything. Mm-hmm.
yeah, so everything has been maxed out on all the tax deduction vehicle, right? So
Mm-hmm.
now the doctor came to you and said, "Hey, you know what? I need a tax free." But
Yes.
remember, Roth IRA is also tax free, right?
Mm-hmm.
But there
Yeah.
is limitation. So there is a vehicle right now that accumulates money,
Mm.
and what it does, it's inside a vehicle, inside a plan that allows your money to compound every
Right.
year. So
Mm-hmm.
the beauty of it is the cash accumulation will grow inside that policy or that plan that
Mm-hmm.
allows you to earn money out of that compounding interest between 6 to 8%, depending on where
But
you're going to put the strategy, right?
mm-hmm.
So the beauty of that is compounding. All the income inside that policy is going to be tax exempt and
Yes.
tax free. How come it's tax exempt? Because it's under the IRC code of 7702 that
7702.
whatever accumulates inside that policy will
Mm-hmm.
continue to be not considered as income for you.
Right, because a lot of
So,
people have this misconception. Oh, it's a type of some general random insurance, right? But it's not. I mean, it goes more than that. That's the reason why that could be for John Smith, who has a 1 year old daughter, after 10, 15 years, can he use that to fund education if ever that he has to pay
Yeah.
for tuition fee?
There is no restriction on that money as
Mm.
long as it's available on the cash accumulation, right?
Oh, mm.
So the good thing on that one too, Chris, there are some programs. Being a doctor, you could also, since you are the major, you're the key person of the business. If something happened to that person, what's going to happen on the operation, right? The day-to-day operation of the business. So there are some plans that we could definitely, you could discuss and create too, is to
Yeah,
create an executive bonus, create a key man, right?
yeah.
A buy and sell agreement,
Buy and
or
sell
depending on
agreement.
the business entity too, we could do some split dollar,
Mhm.
strategy. So then
Be-
again, it depends on the situation of that particular doctor.
yeah, and we this is what popularly known as index universal, right? Correct.
Yes.
Okay, so that's why, guys. Just a recap. If because a lot of people, oh, I don't like this because I'm not making a lot of money. But remember, this is also an asset protection at the end. What Kay was saying, that an index universal life can give you three or more. So number one, if you're a company like this doctor, and then he has a manager, and then that manager, right, something happened, that could be a Keyman insurance, correct? The IUL.
Yes.
And then number
It's
two,
great.
it could also retain them, this key employees that you have, or by having an executive bonus program, right, through the
Yes.
Index Universal Life. And number three, it's also a buyout option, right? When does buyout can apply for, let's say, Dr. John Smith? He has a partner eventually, his best friend, Janie Smith. Can
Mhm.
it also be a buyout use option?
Absolutely, because if they
Mm,
want to separate, either all the money that's inside that policy can be given out to the partner who's leaving, right?
mhm,
That's the beauty of it. You don't have to shout out on the money of the company because there's enough cash accumulation inside that policy that would
mhm.
enable to help and pay for that partnership to be buyout.
Yeah, and at the same time, in personal, can they get, let's say they already have an IUL on their company, can they have a personal IUL? Let's say John Smith, he has a wife, Mary. They can get a personal IUL, right?
Oh, they basically everybody can have multiple
Mm-hmm.
policy. They could own multiple policy, and it's
Okay.
really up to you. There are some people has six policies. There are some people
Yeah.
has four. You
Mm.
know, sometimes it's good to have multiple policy. Why? Because if you some of the policy gives you a living benefit. So if you get sick,
Sick. Mm-hmm.
right? If you have chronic illness, it's going to be harder for you to have to purchase another life insurance, right? Or another
Yeah.
policy. So at least you have one reserve for if you use the other one.
Mm-hmm.
People would think like life insurance is an expense. No, it's not. It's a asset
Investment,
protection
asset
vehicle.
protection.
Mhm.
Mm-hmm.
Yep.
Actually, we have a client, Kay, last year. She is cancer free. And right this year we were all surprised there's a stage 4 cancer she was diagnosed, so the income stopped. But because she didn't get the IUL last year, right now it's harder or even impossible for her to get. So the income stops. So I understand, totally understand about the living benefit of this
Mhm.
policy, and also you'll never know an asset protection, because whatever happened to us, we leave, we buy, we sell, we die, expenses continue. And that's the reason why you always need to have an emergency fund like Index Universal, right?
And the good thing on that one too is it's actually as long as it's below MAC, right? Everything is
Mm-hmm.
being controlled, right? So as long as the money that you put in this policy is below MAC, you continue to grow that money on tax exempt.
Mm-hmm.
So this is something like a lot of people kind of like, is it too good to be true? Well, it is really good for you to really understand it now with the increasing of inflation and taxes on what's happening. You really need to diverge, like diversify it, a
Yeah.
different plan, right? So you could have everything, but you just need to make sure to strategically put this together in order for you
Mm-hmm.
to feel that peace in your heart, knowing that you will continue to You will continue to live the lifestyle that you want. Same with your family and your loved
Mm.
ones.
Yeah, and you can even use the cash value to buy a new house or down payment if your
Yeah.
daughter graduated, or
Mhm.
maybe a family trip. Right? Or
Absolutely. You could definitely create a college fund for your
e-
child too using that index, as you mentioned earlier.
and personal testimony, even Filipinos that we are extended family of our family in the Philippines, and there's a medical emergency, that cash value accumulation can also be used, right? Because of the flexibility.
Yeah. Mhm.
Okay, so one more question. This is a frequently asked question. A lot of clients that coming to us, oh, already have Roth IRA. If they said, what's the difference of the Roth versus this cash accumulation life insurance or index universal life?
The Roth has limitation on your
Mm-hmm,
contribution, right? Every year you're only allowed to put 6,500 if
mm-hmm,
it's a personal Roth IRA. But if
yes,
you're going to create a 401k, then it goes up to 23,000 a year. But
mm-hmm,
what I'm saying is this is going to be considered any Roth IRA. It's tax free, right? After a certain year, there is a 5-year rule that we have to
mm-hmm,
comply, and you're only going to be able to have an access on it that is fully tax free is when you turn 59 and a half years old. If you
mm-hmm.
take the money out under, 59 and a half years old, you're still going to be penalized and you're still going to be
Right.
taxed, right?
Mm-hmm,
So people has to wait up to 59 and a half years old. And the thing too is what if you turn 60, right? All the money inside that Roth IRA will also going to be considered as an income when they compute your social security. Okay? Because they see that it's another resource of your income. You will not be taxed, but it
yeah.
will be calculated on your social security compensation. But on if you have this cash accumulation plan, the money that you have there, it's something that again, it's under the IRC code of 7702. You're able to take that money and you don't have to report it as income because it's under that IRC code umbrella. So, and it's also not going to be considered as income when they compute your social security. So, what I'm saying is both product or it's very different,
Yeah.
right?
And
And it's really something for an individual, right, to really rethink on how they want to really put together their financial platform
mm-hmm.
because you really need to diversify it. Because if you don't, everything is just one in one basket, everything can be
Mm-hmm.
all taxable, right?
Yeah, and at the end, on top of that, there's a living benefit with the asset accumulation on top of the debt benefit. Okay. So
Yes.
guys, thank you so much. I know there are just so much information from this one. That's why we have a replay on YouTube again on Chris Waikoko. So that's why our company Waiko Tax, we have a bundle offer if you're find it complex. So we would know how much you can invest and put your money to diversify. We are offering a one-time offer of 523 discount when you bundle your bookkeeping and tax with us. And also you have another benefit is all your tax and email support. We also handle your audit for the next 3 years. A copy of your transcript we provide that, and you have a dedicated virtual accountant. So that's why, what are you waiting for your 2023? If you haven't filed your, if your books is a mess, we are here, and we can also help you to file the extension and quarterly 10,000 tax savings plan just for you. So these are the following services we have. We have the accounting, medical billing for doctors, tax planning. We also do loan processing for small businesses. And that's why you can connect with us. Again, what we do is diversify. We review your company from your entity, your record keeping, the different tax shelter products you have, and then also the different tax credits. Okay, we also do that, the research and development. Oh, we also do the before the SETC, right? The self-employment tax credits, and at the end of the year, we file your taxes. That's why we can come out with the 10,000 tax savings pizza pie chart. Why do you want a cloud-based accounting? Because you have to have peace of mind, save headache, save time, money, and then faster access to grants. Because our goal is to increase your cash flow while legally reducing or minimizing taxes. And then why Wyco Tax? We stand by our name, WYCOK. Worry free, year round, competitive, and on time. Texas based company. that responds to any property sales, franchise tax, and income tax concerns. Again, we have the bundle. So stay tuned next April 9, 9 a.m. Central Time. We're going to talk about the types of business insurance you need. So if you have not subscribed to us, please subscribe on our channel. And we always offer a free 30-minute book consultation. Okay, any last words before we end? Okay, there you go. Let me stop sharing.
No, all I can say is like at this point in our life, when people would ask us, say, "Okay, you know what? How can we avoid or not pay taxes?" Hey, we are very responsible. We encourage you to pay taxes, but there are ways on how to minimize it, the legal way. And we love being living here in the U.S., right? The goal
Mm-hmm.
is all of our taxes are, that's why we have good roads. When we drive around, it's going our taxes, but at the same token, we also have ways on how to minimize it and reduce it through different plans. Okay.
Mm-hmm.
So
Yes.
taxes will never go away, because until we die, whoever inherited or benefit from it, if it's in a qualified plan, you're still gonna pay taxes. So be friendly with your tax, you know, um, buddy there, and I'm
Yes.
sure Chris is going to be able to help you on creating some strategic, financial planning. Okay,
Yeah, that's
thank you so
why.
much again.
Thank you so much again, guys. Thank you for watching our Tax Savings Tuesday, tax live savings live chat. Because just like you, your tax needs a break. Thank you, everyone. Thank you, Kay.
Have a good day.
See you